Hi everybody, Marco Carvalho here from businesscreditblogger.com. Today's video we're going to talk about business credit card funding, how to get up to $150,000 in business credit cards for your startup or existing business, and more importantly, these only report to the business credit reporting agencies. So if you want to know how actually does our business credit card funding program work, what does it take to qualify, how much credit limits can you expect, this is the video for you. So let's get started. Okay, so first and foremost, who is business credit card funding for? If you're a startup business and you're just trying to get access to revolving credit, working capital, and you want to build business credit, perfect program for you. It also helps you separate your personal business expenses. If you're a small business owner and let's say you haven't built business credit or you've been using personal credit cards for your business, or some of the business credit cards that you currently have show up on your personal credit, then this is the program for you. If you're a real estate investor and you want to get access to cash and credit that you can use for real estate investing, whether it's paying contractors, rehabs, etc., or you're looking to pull lump sums of cash from your cards for down payment in real estate, this is the video for you. So this will help you separate your personal and business expenses. And as a business owner, that's one of the number one things you want to do is create that separation between not only your expenses, but also your credit. Now, if you want access to working capital at any time to use anywhere and for any purpose without restrictions for your business, this is the type of funding you want to get. And you want to protect your personal credit. You're tired of your company's debts. You're tired of making business purchases on your personal credit cards, and it impacts your credit utilization and FICO score. You want to shield it and completely separate your personal from your business. This is for you as well. You want to build business credit. Let's say you have a business or you are a new business and you want to create a credit file for your company that can stand on its own and eventually qualify for its own type of credit based on your company's credit worthiness without always having to rely on your personal credit. This is the stepping stone. This is the program to get you to where you need to be. And then also you want access to revolving sources of cash and credit. You don't want a loan, let's say, and you use up the money and you got to go get another loan. A revolving source of capital is money when you need it. So if you're looking for that type of security and comfort, if an unforeseen expense comes up for the company, or you need to go on a marketing campaign, you need to purchase certain materials, etc., this is the type of funding you want to consider. So who also is business credit card funding for? If you're looking for a fast and easy way to get access to lines of credit for your business and you don't want to have to worry about providing tax returns for your company, providing your personal tax returns, financials, bank statements, you just don't want to go through all that documentation, P&L statements. Also, you don't want to wait a month or 2 months to get funding or decide whether or not you're going to get approved or not. This is the type of program for you, because business credit card funding is a no-doc program. And basically what that means is there's only 3 documents we need from you to start business credit card funding, to get credit cards for your business that report strictly to business. All we need is your driver's license, EIN letter for the business, and your articles of incorporation. Those are the 3 documents the banks need that we furnish them to process your apps. So this is a no-doc program, so you won't be required to furnish all your tax returns, and especially if you're a startup, you don't have financials yet, or you don't have a strong tax return that you want to show. So this is where your personal credit, you're basically co-signing for your business. So we're leveraging the strength of your good personal credit for you to get business credit card funding. So at the end of the day, the way business credit card funding works is it's a 14 to 20 day process. So it's a fast process. You don't have to wait months or even up to a year to get funding. There's no different types of funding rounds or anything like that. This is a 14 to 20 day process, and you have access to your credit. So it's a very fast program. You get 4 to 5 business credit cards that are issued to your company's EIN number. You are the personal guarantor, but as far as PG goes, it doesn't show up on your personal credit. So these business credit cards, any debt you carry, none of them reports to your personal credit. These particular accounts issued by the banks only report to the business credit reporting agency. So this helps create that separation. So combined credit limits, you're looking at about 25 to up to 150,000 in combined credit limits across the 4 to 5 cards. Now, as far as what type of interest rate, It really depends on the bank. We aim to shoot for to hopefully get you a couple of the 0% intro APRs on purchases. Those can range from 6 to 15 months. So that means you have 0% interest rate if you have to buy some materials or you have to buy some inventory, etc. Then you have 0% for the period of time that the bank offers it to you, which is nice. The annual interest rates are standard 9.9 to 19.9. What we're seeing traditionally is anywhere from 10 to 15% is your annual interest rate with these business credit cards. Your minimum monthly payment is 1 and 1.5% of your outstanding balance. So it works just like a regular personal credit card. So you'll have your minimum monthly payment. It's a revolving source of credit. These particular cards, they'll only report to the business credit reporting agencies. So this will create a credit file with Experian Commercial and or Equifax Small Business, depending on which credit reporting agency the bank reports to. This also helps you establish 4 to 5 accounts reporting on your business credit report. So if you're a business owner and you don't have a credit file, let's say you go to smartbusinessreports.com, that's Experian Commercial's website, do a search for your company on there. If no credit file exists, it'll say no credit file exists. That means you don't have a credit file for your business with Experian. So this will create your credit file with Experian. This will create a credit score with Experian by simply getting these business credit cards. You can do the same thing with Equifax. You can do a search, go to Equifax Small Business and do a search for your company there. You'll see if you have an account, a listing with them, they'll tell you. If not, you have no credit file with Equifax. You can do the same thing with Dun & Bradstreet. Dun & Bradstreet's mainly for vendors, suppliers, and retailers, but you can go to dnb.com, do a search for your company to see if you have a credit file there. So this will create a credit file for you, and this will establish 4 to 5 relationships that your business will have now with banks, 4 to 5 banking relationships. Why is that important? It's very important because those particular banks that you now would have a card with, you're establishing a relationship with, you're establishing history with. So that particular bank will be more likely to give you a potential credit limit increase on that account. Also, they'll offer you additional funding for that account, maybe additional financing products that they offer, etc. So this is important for you as a business, whether you're starting out or an existing business, to have multiple banking relationships, because banks compete for your business. That's why they send those 0% introductory offers or balance transfer offers. If you're not using your card and you're using another one, you'll get those offers in the mail, maybe on the personal side. You'll also get those on the business side. And this establishes a business credit rating for your business. So your business credit rating kind of operates like your personal credit score. When lenders, suppliers, or even investors check on your company's credit, they want to look at what's your credit score for the business. Now, another really huge benefit of going through our business credit card funding program is we have an additional service on top of this that's only available to our clients. You can't find this anywhere else, is that you have the ability, we offer a cash liquidation service. So that allows you to pull 100%, up to 100% cash of your credit limits from your business credit cards for whatever purpose. Let's say you need to purchase a property for the business, or let's just say you need a large cash injection and you don't want to worry about doing balance transfer strategy, or you don't want to worry about cash advance, high interest rates there. You can utilize our cash liquidation service and it's treated as a purchase. So that's a unique service that's only available to our clients who go through our business credit card funding program. So that's a huge, huge benefit, especially for you if you're looking to pull large sums of cash out from your business credit cards. Okay, so why business credit card funding? Let's break this down. Protects your personal credit. The cards issued do not report your personal credit. Now, what's important, it's important to realize that there's a dividing line between credit cards for business. There's lots of business credit cards in the marketplace. In fact, there's over 500 cards in the marketplace at any given time, but less than 100 of them actually report to the business credit reporting agencies. Some business credit cards report both to personal and business, but truly if you're looking to have none of your business expenses or your debt that you use on credit cards for the business should show up on your personal, this is the program for you, because these cards are specifically designed to create that separation. None of it shows up on your personal, okay? Now, the second thing is why business credit card funding is it builds business credit. So if you're looking to build a credit file for your business, these particular cards will build your business credit file and your business credit score. Now, just so you know, there's 3 major business credit reporting agencies. There's Dun & Bradstreet, Experian Commercial, Equifax Small Business. Dun & Bradstreet is a business credit reporting agency that's mainly receives data from suppliers, vendors, retailers, equipment finance companies, etc. Whereas more banks and lenders will report to Experian Commercial or Equifax Small Business. So it's important for you as a business owner to have a credit file established with all three main business credit reporting agencies. Because when you go and apply for credit as a business, and let's say a supplier pulls your DMB report and you don't have a DMB report. Let's say you go to apply for a particular loan from a bank and they pull your Experian business report because that's who they pull data from, and you don't have an Experian report, then to them you have no credit file. So that's why it's important to build your credit file with all three main agencies. And be sure to check out our site, businesscreditbuilders.org, because that's our main site where we list all of our products and services, like our business credit building system, our funding programs like this business credit card funding. But let me give you an example of what you can expect and why business credit card funding is so important and why it's so impactful. Number one is, let's say we get you 4 to 5 accounts. The first card we get you, and this is a 14 to 20 day process. So in 14 to 20 days, let's say you end up with 4 credit cards for the business. One with a $10,000 limit, a $15,000 limit, a $25,000 limit, and $30,000 limit. So let's say you have $80,000 in total credit limits that was raised for your business. You have now available to you in 14 to 20 days. Well, what that means is that $80,000 in credit is now going to be reporting to your business credit report. So that's $80,000 in credit now showing up on your business credit report. That's bank issued. That's revolving credit. So number one, you've created a credit file with the business credit reporting agency. Number two is you now have 4 accounts with $80,000 in credit showing up on your business credit reports. Number 3 is you created a credit rating for your business. And number 4, you have access to over $80,000 in credit when your business needs it, whether it's for purchases, whether you want to do balance transfers or cash advances. So that's 4 major reasons alone why business credit card funding is so powerful. Now, let's talk number 3. Why our business credit card funding program? Why do it with us? We maximize your credit approval. So what's important is, obviously there's bank card issuers, there's major banks, there's regional banks, national banks, there's even credit unions, state banks, etc. So when we do a review, our underwriter identifies 4 to 5 of the banks, the top banks that we believe, based on your credit, your age of your business, your utilization, your scores, etc., all those factors, which 4 to 5 banks are most likely to give you the best credit offer, the highest approval, the best introductory rate offer, etc. So we create the list of banks for you, number 1. Number 2 is the order in which we apply is very crucial. And this is things, if you're going to do it on your own, number 1, you don't know which bank it reports to business or which reports to personal. You only want business. Our program specifically only gets you cards that report to business credit agencies. The order is important as well because certain banks will auto-decline you if they see that you applied at a competing bank. So that's another thing. And the timing is also crucial, the timing between application submissions. Now, our process is 14 to 20 days, but it's extremely important in which the process and when you apply for each particular bank and in each particular order. Now, personal credit optimization as well. How are we optimizing your personal credit? We're leveraging the strength of your good personal credit with your higher score, the factors that your credit utilization, which banks you currently have relationships or which banks you don't have relationships with. So this allows us to pinpoint which particular banks are most likely to give you the highest credit approval, and the other business factors that come into play as well. The age of your business, what region is your business, which region are you located in, etc. So these are all things that allow us to maximize your credit approval. Now, the other thing is you avoid automatic declines by going through business credit card funding. Well, what does that mean? Now, as you know, there's a couple of major big banks. You can see right here, Chase, Capital One, B of A, Citi, Barclays, Amex, Elan, etc. And there's hundreds of cards across these banks, and they all have different underwriting criteria. Obviously, there's personal cards, there's business cards, there's business credit cards that report to personal, there's business credit cards that report to business, there's business credit cards that report to business and personal, and there's charge cards, there's cards that actually don't report at all. So there's many different types of business credit cards, and there's, of course, there's branded cards, there's co-branded cards, etc. there's over 100 bank issuers alone under Elon, which is the biggest underwriter out there. And apart from these big banks, you also have hundreds of other banks, including credit unions and regional banks. Okay, so that's a lot to digest, right? So certain banks, like I talked about earlier, will auto decline you if they see a recent inquiry from another specific bank that you applied for. This is why with business credit card funding through our program is the order in which we apply, the banks that we identify, and the timing it makes our program so effective, and that's why we're able to raise so much credit for business owners in the shortest period of time. Okay, you don't have to wait for months on end or up to a year to get funding. 14 to 20 days, we're done. And we're going to share with you some recent client approvals of ours here towards the end of the presentation. Number 5, why you want to go through business credit card funding is you get access to working capital. It's a revolving source of credit. You can use it for making purchases, balance transfers. You can do cash advances. If you don't want to do cash advance and utilize the balance transfer strategy, definitely you can take advantage of our cash liquidation service. That gives you the opportunity to pull up to 100% of cash without worrying about cash advances. Now, there's access to a preset credit limit, and you can borrow against your credit line whenever you need it. So this is not a loan, it's a revolving source of credit. You can pay it in full in 30 days. You can carry a balance. So that's the beauty of it. It's revolving. And you can pay a minimum monthly payment. So let's talk about what do you actually need if you want to go through business credit card funding. You see the value and why it's important. Is first you have to have a separate legal entity, whether it's a corporation, a limited liability company, etc. And your company must be in good standing. So if you've been in business for a couple of years, make sure you go to your state's website where you incorporated your business and do a search under the corporations division. Search for your company. Okay, when you find your company, click on it, and on the state's website, it'll tell you if this company is in good standing. If your company is inactive and not in good standing, you want to make sure you pay your annual report filing fee. Some states have an annual report filing fee of $25 a year, etc. But you want to make sure that your company is active, because if you go through business credit card funding and a bank, one of our banks check your company, and they do that on the state's website, and they see it's inactive, you're going to automatically get declined. Okay, so you have to be in good standing. That's something you want to check out right away. You also have to have an employer identification number. So when you incorporate your business, you get an EIN. Okay, that's what's used also to create your credit file with the business credit reporting agency. So you need your business contact information. Obviously, this is basic information, your contact information, the business address, business phone number, etc. And it's good to have a business bank account already established, okay? Because the banks ask that on the credit app. They ask, where do you have your business bank account, okay? Now, and that's all you need. You don't need to have anything else. Let's say you don't have a DUNS number yet. You don't have a credit file for your business yet. That's okay. This helps you start building business credit. So those are not requirements. Now, why a separate legal entity? The purpose of it is because it allows your business itself to enter in its own contracts, and it's literally treated as a separate being from yourself as an individual. So when you incorporate your business, you get an employer identification number, and that's used to identify your business not only with the IRS, but also with banks, lenders, suppliers, vendors, and other businesses. So your EIN is used to create a credit file with business credit reporting agencies. So I like to tell people, think of your EIN as the social security number for your business. Okay, so you just like you use your social when you're applying for credit, when someone wants to check your credit, what's going to happen is when you're applying for business credit, they're going to ask for an EIN number. Okay, so that's why your EIN is very important along with incorporating your business. Now that we talked about why business credit card funding, why it's important, and what are the things that you need to get into business credit card funding to go through our program, how much business credit card funding can you get for your business? How much can you expect? So what I'm going to go over right now is the key factors we look at step by step. And this is really important for you because it's going to allow you to kind of determine. And just remember, when we go through pre-qualification and you're curious to see how much you can get in business credit card funding, remember, our pre-qualification review is absolutely free. There's no cost for us to review your credit. You supply us the report, so there's no hard inquiry. And that way you get an idea of how much funding we can get for you for business credit cards before you decide to move forward. But let's talk about personal credit scores. 680 credit scores is the minimum. You want to have 680 on all 3 credit bureaus. All 3. Many times we have people who submit like a 680, but then they have a 610 and a 604 on the other 2 bureaus. You know, if you have 680 on 2, that's good. That's minimum. You don't want to have 680 and then the other 2 bureaus be low scores. So 680 credit scores. If you don't know what your credit scores are, your personal credit scores are, go to creditworthiness.com. You can get your personal credit report for $1, and this is not a hard inquiry because you're ordering your own credit report. Okay. Now, as far as a FICO score, that's the most widely used scores. When you go to creditworthiness.com, they will provide you your FICO score. The FICO bank card score is also another widely used score. Now, FICO alone has over 50 credit scores. They have the mortgage score. They have the FICO auto score. There's so many different variations of the FICO score, but these are the 2 most widely used scores when it comes to business credit cards, when banks are reviewing you for business credit card funding. Now, there's also educational scores, the Vantage score. So many times when people come to us and they say, well, I have a 750 and 760, and they got it through Credit Karma, let's say. But then their FICO score is a little bit different from that. It's important to realize, I mean, there is a variation in credit scores. Vantage Score was created as a joint venture with all 3 bureaus, TransUnion, Equifax, and Experian. They created Vantage Score to compete with FICO Score, but it hasn't become as widely adopted as banks are still continuously using the FICO Score. Then there's educational scores. So don't get too hung up on credit scores because it's not if you have a 680, it doesn't mean you're guaranteed approval. That's just one factor we look at. But so you want to make sure your score is at least 680 or higher. Okay. Now, just so you have a breakdown a little bit about how banks perceive credit scores when it comes to issuing credit cards for the business. They're looking at you as an individual, how you're managing your personal credit, because then they decide. They have a determination of how you're going to manage your business credit cards based on how you manage your personal credit cards. So that's why your personal credit is such a major indicator for this particular type of funding program. That's why you don't need to provide financials for the business or tax returns, or you can use it for a startup, because your personal credit is the main thing that's being used for the business. You're basically co-signing for your business is what you're doing, but it's not showing up on your personal credit, which is great. You're just basically PGing for the business. 680 to 739 credit score, 90% probability of delinquency, 740 to 799. Basically, you can see the higher the score, the less likely you are to become delinquent on your account. Okay, so credit scores are a great indicator. If you have a higher score, great. But remember, that's not the only factor we look at. If your credit scores are below 680, remember, we do accept credit partners. So if you have a family member, a business partner, a spouse, or someone who wants to co-sign for your business, where basically they would basically be the PG for the business, but it won't show up on their personal credit, then we do accept that. And now be sure to check out this post, businesscreditblogger.com. That's our blog where we talk about business credit partners. You can go to businesscreditblogger.com, just click in the search tab, click credit partner, and the post will come up that talks all about using a credit partner for your business. We go over FAQ, everything you need to know. I'm sure you have questions. If you use a credit partner, that's what you want to check out. Okay, so now the second thing we look at, of course, underwriters look at is the overall credit report. Length of credit history. If you have less than 2 years of credit history, remember that's a very thin credit history. So many times you may not be able to qualify because you just don't have enough history. There's types of accounts that you have. We look at mortgage, installment, revolving, etc. So that's also an important factor. We look at the number of active accounts that you have. At least 12 or more active accounts is ideal. Of course, we have people who get approved who have 5 or 6 active accounts. That's fine. Okay, but if you only have 1 or 2 active accounts, that's too thin of a file. There's nothing going on. So unfortunately, what happens is, some people say, well, I have a paid installment loan that was, is paid off, and I have a paid auto loan that's paid off, and I only have 2 active credit accounts. Those 2 closed accounts, that's great that you have that, but they're not active anymore. They're closed. So active is something that's ongoing, that's open. Payment history, that's another factor we look at. Recently opened accounts. One thing you don't want to do, and we're going to talk about what not to do towards the end, but is opening up a whole bunch of personal credit card accounts, thinking that, okay, I need to get some personal credit cards. Now I have them. Let me go apply for business credit card funding. And you just opened, let's say, 2 or 3 personal credit cards in the past 60 days. We're not going to do funding for you because you have too many recently opened accounts. Okay, so don't do that. Unpaid collections, you have to have paid collections. So if you have unpaid collections, when it comes to business credit card funding, banks don't like to see unpaid collections. Okay, hard inquiries. Ideal is less than 2 inquiries in the past 12 months. Now there are exceptions, of course, if you were shopping for an automobile or a mortgage, that's different. We do know you get a couple inquiries from that. Where you run into problems if you have 3, 4, 5 inquiries in the past 30 days or 60 days and you're trying to apply for credit cards, and then now you want to come to us for business credit card funding. Okay, so usually that's a no-no. So don't go searching for credit, trying to get it on your own, and you find out you're getting declined. Now you want to come to us. Unfortunately, at that time, it's too late. You have to wait for those inquiries to drop off or you have to wait them to age a little bit, maybe wait 6 or 9 months. Okay. Now, credit card accounts. Let's talk about another factor. This is a big deal because underwriters look at your primary credit card accounts that you currently have on your personal report to assess what type of business credit card limits you're going to get for the business. So they look at primaries. Authorized user accounts do not play a factor. So if you think adding a whole bunch of authorized user accounts with high credit limits, lots of history is going to get you qualified, it's not. Okay? Authorized user accounts serve a purpose though. They do help you boost your score up. Okay? But if that's the only thing you're looking to help get you qualified for business credit card funding, because let's say you don't have any strong primary accounts, you're going to get declined. Okay? We're not going to be able to provide you funding. So your primary accounts are what underwriters look at. Okay, now we'd like to see a minimum of $2,500 on at least 1, 2, or 3 primary accounts that you have, personal credit cards that you have that are active. The other main thing that we look at is who issued that credit card. Is it a major credit card issuer, or is it a high risk bank issuer? Is it a store card? Is it one of those jewelry cards? That's a big factor right there, okay, is who issued the card. If it's a mainstream credit card issuer, that's a plus, like Capital One, American Express, Discover on your personal cards. The type of card is also a factor. Is it a store card, co-branded credit card, charge card? The age of the card itself, the age of the account. Have you had it 1 year, 2 years, 5 years, 10 years? Those are all major factors, okay? Credit utilization we look at. We like to see you under 50% just on credit cards, okay? Many times people think, I'm going to make all these pay downs before I submit it to you guys for review. If you're not sure where you need to be at, don't make pay downs. Save your money. Send it to us. Let us give you the pay down requirements or the suggestions that our underwriters believe will be best for you. That way, you may be surprised. You may not have to do as much pay down as you think. And it's a strategy. So if you want a professional opinion on where your utilization should be, and let's say you're close, feel free to submit it for review, and we'll give you that analysis so you can know where you need to be to qualify for business credit card funding. The other thing, let's talk about active credit cards. So when we talked about credit card accounts on your personal credit reports that are looked at during a review, we look at your primary accounts, the age of the account, and the issuer. So for example, if you had a $10,000 personal credit card with 5 years of history and American Express issued that card, that's a strong account, okay? So that's more likely to get you a higher projection for business credit card funding, okay? Your utilization, if you have 75% or higher utilization on one particular card or on a combination of cards, you're more than likely going to have pay downs that our underwriter is going to suggest. So this just kind of gives you a little analysis of utilization, where we'd like you to see on your individual credit card utilization and your overall credit card utilization, okay? So let's talk about the other fourth factor we look at is the business. The age of the business does play a role. Sometimes we see projections that if the individual incorporated the business a month ago, where the projection we gave them would have been 50% more if the business was over 2 years old. Okay, so age of business does play a factor in how much you're going to get in business credit card funding. Not only just your personal credit, but the age of the business and also your existing banking relationships. Which banks do you currently have credit cards with? Where do you bank? Those are things we look at that'll help gauge the type of funding you're going to receive for the business. The other big factor is, are you on the original documents of the company? When you incorporated your business, are you on the original docs? That's a big factor. Sometimes we see a 30 or even 50% reduction in funding because the applicant is not on the original docs. Unfortunately, it does happen too when you're using a credit partner. Basically what it means with a credit partner is you're basically adding them onto the business, but they weren't on the original docs when you incorporated. You were. Okay, so that's the difference of if you're on the original docs or if you're not on the original docs. Okay, is it an out-of-state business? That also does play a factor. So for example, if you incorporated in another state, but you reside in a different state, that does play a factor in projections. What I want you to check out this video up here on our top 10 factors video, because we go into real in depth on out-of-state businesses, credit partners, when it comes to business credit card funding. So definitely check out this video on the top 10 factors when it comes to business credit card requirements. You'll find that very, very, very helpful. Very helpful. Okay. So I'm going to go over some of the top business credit card mistakes that I see, and I have to say even myths out there. And I just want to clear up some of the confusion or what you may have heard when it comes to business credit card funding or being able to get lots of money for your business if you do this, this, and this. AU accounts. Let's talk about authorized user accounts. Adding a whole bunch of authorized user accounts is not going to qualify you for high credit limits for the business. It doesn't work that way. Okay, underwriters know what authorized user accounts are. They help you boost up the score. That's fine. Okay, and when you're doing it with a family member, they're adding you on. That's fine because you know who the person is. That's a legitimate way to use an authorized user account. You just want to be careful that the authorized user accounts that you're being added on don't overpower your primary accounts. Okay. The other thing you want to be careful is we see authorized user accounts that have high credit utilization, and that hurts you. Okay, so many times you may be recommended to remove yourself as an authorized user because the AU account that you're on has a 75% utilization, and it doesn't look good on your credit report. Okay, banks don't like to see that either. So just be really careful with authorized user accounts. But remember, don't let those be the things that you think that's what's going to get you qualified, because it's not. Your primary accounts is what matters. The other thing is jewelry club credit cards or these high limit store cards that you can get online with a jewelry club or etc., where they give you a $20,000 or $25,000 credit limit, and you think because you have a $25,000 credit card with a jewelry club that you should be able to get lots of business credit card funding. Like I said earlier, is we look at your primaries, but we look at who issued the card. Is it a major bank card issuer? What type of card is it? Is it a store card or is it a credit card or is it a charge card? So those are the factors we look at. So let's say we've seen this where we've had a primary, they had a $1,000 credit card, Capital One, and they only had it for a year. Then they had a $25,000 jewelry club that they had for 3 years. And then they had one other card with a $500 limit, and they didn't understand why they got declined. Okay, but that's a perfect example right there. Okay, so don't think that getting a high limit store card with like a jewelry club or something that you get online is gonna qualify you for business credit card funding if that's all you have. That's the predominant strength factor on your credit report. The other big mistake is buying trade lines. Okay. There's a lot of that going around, and I always tell people, do not buy trade lines, okay? Don't do it, okay? When you're buying trade lines, you're basically paying someone who you don't know for access for them to add you as an authorized user so you can inherit that credit history, etc. So you're basically, anytime you're being deceptive to a lender or a card issuer or even a credit reporting agency that making you look like you have something that you really don't, you're going to put yourself into some serious trouble if they find out or if they investigate. They even can consider that bank fraud. So you want to stay away from doing that. I'm telling you, do not buy trade lines, okay, to make any type of make a peer look like you have credit that you really don't have, okay? Now, of course, authorized user accounts, when it's somebody you know, it's a legitimate authorized user, that's completely legal. You can do that, but just don't get into the buying trade lines. I would never recommend that. Excessive inquiries is another common mistake. Shopping around or trying to get credit and then coming to us for funding, we're not going to be able to do funding for you. Okay, so we see that a lot. Don't get inquiries when it comes to pre-qualify for business credit card funding. An unpaid collection, that's another common mistake, is make sure you pay that collection or get it removed. Okay, now let's talk about some actual clients, so you can kind of have an idea of. We're going to go over some high limit approvals and some, this is the lowest one we want to share with you. We had one client here. They had it's a startup company, less than a year old. They got 4 business credit cards in 20 days with over almost 60,500 in credit limits. This is what the credit scores for this particular client. They were in the mid 7s, high 7s actually too. They had auto and credit cards, no mortgage reporting. Their highest personal credit card limit was a $24,000 Navy Federal account, but they had that credit card for 30 years, which is a long time, okay? They had 3 inquiries on the report. 2 were only a year old, which is fine, and 1 was about 2 years old, about to drop off. The age of the business, though, was less than 1 year old, but this person should have got a lot more than $60,000, but this is the kicker right here. They had a 60-day late in the past 24 months. And they also had 1 card and 1 30-day late on a previous auto loan. Okay, so they had 60 days on one time in the past 12 months on 1 credit card, and then 1 30-day late on loan. Okay, so those are 2 factors that kind of hurt the projection here a little bit, but still a decent amount in 20 days to get $60,500. Now let's talk about actual client number 2. This is a startup again. 25 days, almost 100,000 in business credit cards. Credit scores 759. They had mortgage, auto, credit. That was a good mix right there. Highest personal credit card, 17,000 on a Chase account that they had for 12 years. So you'll already see that there's a common thread here. High credit limits on their personal credit cards, and they've had it for some time. Okay, that doesn't mean if you have a high, and I'm going to share another one with you who had a high limit credit card for only 3 years, but got a huge amount. So let me just share with you here. 17,000 Chase, only 2 inquiries again, both over a year old. Again, very low inquiries on these clients. Age of business, less than 1 year old business. So to banks, that's one of the highest risk businesses if you're under 2 years old. Okay, now this particular client right here, $129,000 in 30 days. 4 business credit cards is what he got, and that totaled $129,000. He currently had 7 open credit cards. That's 7 personal credit cards, and the utilization was at 16%. He only had an installment loan and credit cards, no mortgage, no auto. Okay, but he had a good amount of credit cards, 7 credit cards. He had 2 credit cards with only a $15,000 credit limit. One was Capital One, one was Navy Fed. He only had them for 3 years. That's it, just 3 years. And 1 inquiry that was almost 2 years old. So the guy hasn't applied for credit in almost 2 years. Okay, so you'll see 7 revolving credit cards, so they could see some history with his current management of credit cards, low utilization, and 2 fairly decent credit limits on personal credit cards, 3 years of age, and no inquiries hardly in the past 2 years. Okay, 3-year-old business also, another major benefit. $129,000 in 30 days in business credit card funding. Imagine that. In 30 days, he now has $129,000 in credit limits reporting on his business credit reports. It's revolving credit. It's money when he needs it. None of it shows up on his personal credit. It shows up just on his business credit reports. Okay? I mean, to do that in 30 days, that's powerful. Another client who did what's called a combo. $141,800 in credit. We did a combination of business credit card funding, almost $100,000, and $44,000 in personal credit lines. Credit scores were in the 800s. Good credit installment. 13 years, the highest credit card. A lot of age there. Another high age credit card, Bank of America. Only 2 inquiries in the past 2 years, and age of business was 3 years. Okay, so I'm sure you see that there's a commonality here with all these particular clients, but so that's what we look for, and that's how you're gonna get the highest approvals. Of course, don't get discouraged though if you get a $30,000-$40,000 projection, because that's still you getting credit for the business. It reports to business only. It's a stepping stone. It's giving you relationships with the banks. So in 6-12 months, you can get credit limit increases, and let's say that $30,000 in credit you just got now becomes 60, in 6 to 12 months, provided that you use the accounts responsibly. Okay. So how do you start the pre-qualification process for business credit card funding with us? The first thing we want you to do is we want you to order your credit reports. You're going to go to creditworthiness.com. That's going to take you to a special page on Experian that allows you to order your report for $1. Okay, that's the promotion, $1 to get your report. Once you go in there, you're going to download a report in PDF format. So when you log into your account there, you're going to click on the View Report tab, then click Print Report, and the drop down, select the Print Experian Report, but print to PDF. Don't actually print it out, print to PDF. That'll allow you to print it out, and that allows it to save as a PDF document on your computer. So once now you have your full report in PDF format, you're then going to go to step number 3. You go to businessfundingreview.com. That's our secure page. You put in your information. You're going to upload your credit report securely. You click submit, and then you'll get an email confirmation from us that your report is under review. We'll give you a couple of instructions of what not to do while you're under review. Like basically we tell you not to apply for credit. Don't rack up your credit card debt or anything like that. Okay. In 24 to 48 hours, we're going to come up with a funding projection for you, and there's going to be a couple of things that are going to happen. Number one, either you're going to get a C3 rating, which means we can't do funding for you, and we're going to give you the reasons why. Let's say you have, and you're going to get a pre-qual letter. It'll describe what's wrong with the report, whether it's you have excessive inquiries, or you have too many new open accounts, or your scores are too low, etc. And we're going to give you some recommendations, okay? The second thing that might happen is you might get a projection of a specific funding. Let's say you get a business credit card funding projection of X amount. And then we're going to go over the funding projections for you. You're ready to move forward, great. But there may be conditions to it, which means you may have to make some pay downs, or you might have to move some debt, etc. The third result you might get is, let's say you're denied for business funding, but you qualify for personal funding. Let's say your personal credit is not strong enough for business credit card funding because your personal credit file is too thin, but we're willing to help you ramp up your personal by getting you some cash and getting you some personal credit card funding to help you build up your personal credit report. That may be another result you get. And the last result you may get is you may get a full projection. Let's say we project X 50,000 or 70,000 in business credit card funding. You don't have to do anything. You're just ready to move forward. We send you out the funding agreement, and we start the funding process, which takes about 14 to 20 days. So I'm just giving you an example of some of the results you're going to get. It could be one of those 4 results that I just went over with you today. Business credit card funding, like I told you, is a real powerful strategy to build business credit, get access to revolving credit, but protect your personal credit at the same time. Be sure to check out our site, businesscreditbuilders.org. That lists all of our products and services, like our business credit building system, which is our do-it-yourself business credit building platform. We have our funding programs like business credit card funding. If you like this video, give us a thumbs up. We would really appreciate it. Click the subscribe button, because we're always putting out videos like this about business credit card funding, business funding, building your business credit, leveraging the strength of your personal credit so you can maximize your fundability. So with that, make it a great day. We'll talk to you real soon.